Good evening, everyone. My name is Rashmikumar Shah. I'm from Simplicity. I'm doing this webinar from Dallas. Thank you very much for joining today. I do understand this is a working day. We chose Wednesday because this is the last day we could do in 2020, and the earliest then we had in January 10th or 15th, it would have been too late. So now next 2 weekends are going to be good holidays. So I said many of you can watch this webinar on the weekend and you get time to go through all this, correct? So that's the reason we preponed it for the benefit of all our clients and well-wishers. Now, as a caveat, this webinar is for investors in India. It's not for investors in US. We do not provide this service to any people in US. This is for only Indian residents. Disclaimer, I start with every webinar. And yeah, what a week and what a year 2020 has been, correct? Now, so what is the next 10 years going to look like? So many of the things you must have already heard from me before, but I'm going to talk more about it. Now, last week we saw a 3% correction, and many clients and many people panicked that, oh, is this the market top, and should we book profits or get out of the market? So what I did, I got a data how every bull market ended and how every bear market ended, correct? So I start with the bull market. So the first bull market, I've gone back 35 years. So the first bull market ended in 1992, Harshad Mehta time. And before that, the bull market had ended in 1987, 579 BSE index was there. Right? The infrastructure sector, cement, steel, and banking and all those kind of stocks, the old economy stocks, where it gave us 251% return. Then in 2008, the market corrected because of Lehman Brothers crisis in US, and we call it financial crisis, correct? And market from 20,000 went back down to, I'll show you in that next slide. But again, from that bottom, that top, the next top we got is in this February, where market peaked up, correct? Before the crash happened of coronavirus. So this bull market gave 101% return. 20,000 became 41,000. 945, and the market came down, correct? Now from 41,000, the next bull market has started after March, and today we are only reached 46,600, correct? So that is only 10% we have gone. So normally any bull market, from one bull market to next bull, it's minimum 100%. Have you seen that? Year, all the 4 points, correct? All the 4 points, it's minimum 100. So minimum 100, it's normally more than 155 to 175%. So if you count from 41,945, 100 or 145, 50%, it's 90,000 or 1 lakh Sensex will be. We are nowhere, correct? We are just at 47. So this is a long way to go. This is one way of looking at it. I'll show you another way of looking at it now. Now let's go to another way of looking. Let's see how every major market in US bull market went up, correct? So this is, I've taken NASDAQ as a base. Now NASDAQ was at 456 in 1987, and then it went to 487 in 1989, then corrected. Then from there, it went straight to 5,000, 10 times, correct? 10 times. Then here it corrected, and then the commodities boom market started. NASDAQ is basically more of technology companies, correct? And so this technology sector didn't do well between 2000 and 2007 because that time old economy stocks did well. Oil stocks, cement stocks, infrastructure stocks, banking stocks did well. And then after 2007, those value stocks didn't do well and technology again came up. And from there, it has given us 221% return. You saw that. It went to 9187 in February, and from there it corrected. From this, it went back to 6,000, but this was the peak end of the bull market in February 2020. Now a new bull market has started after March, and today the NASDAQ is at 12,600, correct? Now that is 40% up from this level. But NASDAQ normally goes up more than 100 to 200%. Here it went almost 1000% times. Here it has gone by 200% times. But even if we take 100% times, 100% next bull will be there. It should be 18,000, correct? So we are nowhere near that. So if somebody invested at the peak. Now let's look at the bear market, correct? And now if you look at the bear market bottoms, every bottom is higher than the next bottom. The next bottom is higher than that, correct? So I'll give you an example. In 2001, the BSE Sensex bottomed out at 2,600. 2009, BSE Sensex bottomed out at 8,160. So it crashed from 21,000 to 8,160. But that bottom was 200% higher than the previous bottom. Now this bottom, then in year 2020, Sensex crashed from 41,000 to 25,981 in March, correct? So this bottom is also 200% higher than the previous bottom. Now, today we are at 46,767, which is 80% higher. So if you take even 200%, so let's say next bottom is going to be 200% higher than 20,581. It comes to close to 84,000. We are still 46,000. So next bottom is going to be still higher. Market is still in a bull zone. There is no need of profit booking. This is the time to build a portfolio. That's what these long-term trends tell you, correct? But so that's another way of looking at it. Now let's look at another way, correct? Same thing of NASDAQ, correct? This is of Sensex. Now I'll show you about NASDAQ. If you look at NASDAQ, except for this year 2000, when commodities, NASDAQ is of technology stocks, except for this case, everywhere the bottom is higher than the previous bottom. So now the 2009 bottom was at 1265. This time the bottom was at 6,631, 400% increase. Today the NASDAQ is at 12,600. I don't think the bottom we'll see, NASDAQ is going to go about 20,000 and then correct it and come down back to 18,000. So that 18,000 is way about 12,600 as of today. I wouldn't worry much about it. I'll keep building and investing in technology stock, the world economy. So this is one way of looking at it. Now mentally we have to prepare. But in the bull market, markets do correct? Markets do fluctuate. Market don't go up in one way. One day it goes up 5%, second day it comes down by 3%, and it fluctuates and it confuses everyone. So what you should do when markets go down in a bull market, I'm going to share that with you. When markets correct, what do you do, correct? So this data is for 40 years. This data is for last 40 years. Since 1980 to 40 years, there were 9,628 trading days. So what we have done is, we have classified when markets went down and markets went up. So out of 9,628, 5,092 days market went up, 4,600 markets went down. So basically it's 55-45%, correct? 55% days the market went up, 45% time markets went down, correct? Now, within those days, there were only 4 days when markets fell by more than 10%. Or market went up by more than 10% in one day. 6 days, correct? There were 6 days like this. So we have to focus on when markets crash more than 3%, 5%, 8%. What are we supposed to do? So I have identified few dates here. When market crashed by more than 10%. Those dates were 28th April 1992, 17th May 2004, 24th October 2008, and 23rd March 20, correct? So today, in this year, on 23rd March 2020, market crashed by 13%, which was the highest ever in one day crash, correct? The index came down to 25,981. This is the day the market bottomed out. How many of you, today the market is 47,000. This is hardly 10 months old data, correct? In last 10 months, market has gone up from 25,981 to 47,000, 46,000 odd. How many of you had guts to invest on that day? So when next time markets fall this day, you will invest on this kind of a day, bloody day, correct? We call it a bloodbath on the day. So I had only one client who called me, and he was so courageous. He says, Mr. Shah, we invest at 36,000. We invested at 30,000. Why shouldn't we invest at 26,000? I said, go ahead, my friend. How much you want to invest? So he invested 20 lakhs on that day, one shot. Now that 20 lakhs today has become 40 lakhs, not 40 lakhs, it has gone 38, 39 lakhs. He got that kind of. How many have clients, how many of you had thought of investing that day? Everyone was panicking that when the market goes up, I'll get out of it, correct? Right? So when this kind of days come, it's a day to buy. Now I'll give you another example. On 12th March, market fell by 8%. So it was 32,000, correct? So on 23rd March, it was 25. So even if you had invested at 32,000 and then you had seen 25, you would have panicked. But still, you stayed invested. Today, you would have got 47,000. So if you had a SIP, which went on 12th March when index was 32,000, and you saw the market going down, you started worrying, what should I do with my SIP? Should I stop? No, you shouldn't have stopped, correct? But if it went down, correct? But from there, it took a turnaround. So on any of this day, so we tell the client that whenever markets fall by more than 3%, just blindly invest. Now, markets went up more than 10%, in this day, right? 30,000. So suppose you invested here on 25,000 and you saw on 7th April 30,000. Should I get out of it? No. This was, even on 7th April you would have invested, or after market went up 9%. Still it's today 47,000, correct? So here why this market went down on these 2 days. Whenever markets go down by 8% or 10% or 5%, margin calls comes. It's not that people are selling stocks. Margin derivative positions have to be liquidated. And so the moment markets go down by 3% or 4%, every broker, every institution checks what is the margin call and how risky those who have taken loan against shares pledge. So the margin triggers and then they have to sell them. And as they sell more, the market goes on further down. So investors don't sell. It's basically on this date, 23rd March, I'll tell you, almost 15 to 20% of global derivatives got squared off. So many people lost their jobs on that day. And that was a day you should have invested because it was a fire sale, correct? So there was no fundamental. Now, on this day, 30,000, what happened? Then market went up. Little bit people started short selling. Why it's going up? So on 38,000, it went up by 9% because short sellers were trapped. It was not that investors were selling. It was the short sellers who were trapped and they were buying, correct? So you need to understand that and you need to talk to us if you have any questions on those when markets go by 4 or 5%. But never panic. Never panic. If you want to make good money in the stock market, you have to analyze very objectively. And we are very, we dissect the data. We know we are in this business I'm personally in this business for last 40 years. I have a very thick skin and I have seen lot of ups and downs in my life. And I immediately come to know what to do on those kind of panic days. Very coolly and calmly, very objectively, we analyze the data. And this is the way to work. Okay, so with this, I'll stop here and I'll go to the main topic of the day. I just wanted to highlight that in going forward, in next 1 year, whenever markets correct by 3 to 4% in a day, and trust me, it's going to correct. In a year, 3 to 4% correction happens at least 5 to 6 times. Every year, it happens 5 to 6 times when markets are volatile in the upswing or downswing is 3 or 4% in a day. And those are the days you need to invest when they go down. I'm not talking about when they go up. When they go down, you need to invest. So I go back now to the main topic of the day. The trends for next 10 years, correct? Where do we focus for next 10 years? So what is going to drive the market? So like I said, in 2000 to 2010, 2008, cement, steel, infrastructure boom was there. And then from 2008 to 2020, information technology and technology stock boom was there worldwide, correct? Infosys, TCS in India, Microsoft, Google, Apple. FANG stocks did very well. So now, what kind of sectors are going to move for next 10 years, correct? What is going to drive the world global economy for next 10 years? And which are the sectors? Because simplicity, is specialized in sector investing. We do theme-based investing. We don't like to invest in generic funds because you get national average. The national average of per capita income in India is $1,800. $1,800 is 1,25,000 rupees. Now, we all earn more than 10 lakhs or 15 lakhs a year. We are not national average. Same way, we do not want to get a national average return. We want to get above national average return, and for that you need to be focused on theme-based investing. If you invest in vanilla funds, large cap, mid cap, small cap, 99% people invest in those kind of funds, and you'll get the national average, and which is very low. So we focus on theme-based investing, and theme-based, so we identify, correct? So what is the projected economic recovery for next year? The next year, as you see, the 2021, everyone is expecting a global recovery. US is going to grow by 3%. China is going to grow by 8%. India is going to grow also by 8%. Japan is going to grow by 2.3%. So if you see, India and China stand out. Even US stands out because normal growth in US is about 2.5%. This year it's expected to grow by 3%, which is very good. 3% growth on a $25 trillion economy. It's a huge amount, correct? It's almost $1 trillion it's going to add. India is $2.5 trillion economy. On $2.5 trillion, 8% is how much? 8% is $100 billion, correct? But America is going to add $1 trillion to its economy. India is going to add $100 billion to its economy. So there's going to be a lot of growth in America, there's going to be a lot of growth in India, and there's going to be a lot of growth in China. Now, we are not focusing on China investments because China has there is a structural problem there. So we keep aside China, but we need to invest in economies like Japan, India, US. They are all globally diversified. We are keeping Europe out because they are also currently, Europe is also struggling because of Brexit, and there are so many changes happening there. But if you focus on US, India, and Japan, next year should be good. Of the other emerging economies, Brazil is going to grow only by 2.6. Russia is going to go only by 2.8, and South Africa is only going to go by 3. So among emerging economies, of the 5 big emerging economies, India and China stand out. Among developed economies, US and Japan stand out, correct? So we need to focus there. Now, coming back to, so emerging trends in the capital. So next 5 years, 10 years, what is going to drive the world economy? The world economy is going to drive more from work from home culture, software services, 5G, artificial intelligence, genomics, digital wallets, and satellite technology. Satellite means space technology. So these are the 5 key drivers, so I'm going to discuss this in more details. These 5 key drivers are going to drive the world economy to go from what level we are today. So the total market cap of the world economy today is more than $100 trillion, which is highest ever we had seen. $100 trillion is the market cap of the world economy. The world GDP is around $80 trillion. The $80 trillion is going to grow above $100 trillion or $120 trillion over a period of next 10 years. So what is that $40 trillion world GDP is going to grow in next 10 years? Who is going to contribute value to that? So these are the 5 sectors which are going to drive behind it. These are the 5 sectors which are going to develop. And so let me give an example. How much more steel and cement are we going to consume in next 10 years? Personally, correct? Not much. But we are going to consume a lot of 5G. We are going to consume a lot of internet. We are going to consume a lot of money on medicines, correct? So we are going to spend a lot of time on digital payments. So these are the sectors which are going to propel the world economy. So I'm going to share more details in the slides going forward. Now, so let's take work from home, correct, today. If you take work from home, now even this webinar which you're seeing is tittering. It's not very smooth, and in between your signals are dropping, it's going slow. It's like the same thing. I bought my first computer in 1987. I bought my first laptop in 1992. Now, I still have that 1992 laptop. I have a laptop from 95. Every 4-5 years I have to buy a new laptop. All those laptops, if I take and put it next to the current laptop, you will see way difference, correct? Big difference. The technology of that time, and we had floppy drives, the speeds were so slow, and you see the laptops of today. So same way, today the work from home culture, internet, broadband is so slow. In 5 years or 10 years down the line, we'll think, oh, in year 2020 I used to work with this kind of speed. So that massive change is going to happen. So imagine if everything speeds up 10 times than what it is today, how much productivity will go up, how much business will be on internet, how much the speed will be there everywhere. So we are going to see 10x speed in all internet things and work from home and all those. So there is going to be massive investment happening in this sector in next 10 years. So we need to watch this sector, and we will get some very good companies. Most of these companies will be from US. We need to invest in those. Now, work from home and further requirements, correct? 5G, improvement, software service. Now, I'll give you an example of Simplicity, correct? Now, my biggest expenditure at Simplicity is on salaries of employees, and the next biggest expenditure is building an information technology platform. So IT expenditure is my biggest. We are not going to spend money on buying more offices or rent. We are going to share offices, correct? We are living in a shared world now today. You don't have to own a car. You can share a car, Uber, correct? You don't have to own a hotel. You can rent through an Airbnb, you can rent a bungalow anywhere in India or anywhere in the world, correct? So you don't have to have a hotel, correct? Now, so we are living in a shared world. So what happens is technology allows you, and you have to invest. So most of the businesses are going to invest more in technology than more real assets. So Simplicity is not going to buy any real estate properties anywhere in India or even rent it, correct? Because you can share our offices, correct? We can take temporary offices, virtual offices, rather spend on technology platform. So more money is going to go in software development, technology, and this is going to be happening worldwide. So IT sector is going to be one key sector where everyone needs to invest. Now within IT sector, there are going to be a lot of other subsectors like hardware, software services, semiconductors and all that. So yeah, Simplicity will offer those kind of investment options to you as in they are available in India. And also, if they are not available in India, we are tying up with some foreign things, and we'll be routing your investments in that. So we'll be introducing all those kinds of investment options for all our clients. Now, this is a key growth area, correct? Now, other thing, if you see 5G, today India 5G is way behind, but see America, see Japan, see China, see Australia, they are way ahead of 5G. 5G is going to be the main productivity driven, going to drive. Now, why 5G? I just give you an example. What is 5G going to drive? 5G is going to drive artificial intelligence. So I'll give you an example of artificial intelligence. 2 weeks back, I had to buy a refrigerator. So I in US at my home. So I bought a refrigerator. That refrigerator has a computer inside it. It has 3 cameras. It has a memory chip. It has RAM inside, correct? And it has a TV screen, a computer screen on the front door. So I can watch TV. Now and that fridge, I control the fridge through my iPhone. So when I go for shopping groceries and I forget what I want to buy, I can click on my phone, and the camera inside there are 3 cameras in the fridge, 1 in the front and 2 inside. So it tells me what is in the stock in the fridge. I can control the temperature. I can listen to the music on the fridge while family members are working in the kitchen. You can chat on that fridge. That kind of technology is there. I can control the electricity at my home, lights, switches and everything on that fridge. So now that fridge, is connected on internet, and the manufacturer of that, who's a Samsung, they constantly come to know how that fridge is functioning, because that fridge itself is becoming like a computer now. So they know how it's functioning. They'll come to know when the fridge stops working. Before I know, they'll come to know, because the fridge is constantly communicating with them. So they are collecting all that data. Imagine. So now Samsung, the manufacturer of the fridge, knows how his customers are using fridge, and they're getting more and more artificial intelligence and data. So every person who buys their fridge, they know how they're consuming, how they're storing food, what is the efficiency, that kind of things are happening. So imagine the car, correct? Now why Tesla is considered to be a very good it's considered to be a software company, not an automobile company, because every Tesla car is a computer, and they have 5 years data, last 5 years of data, how people drive, their driving habits, what are the technology problems in the car. No other company in the world, you buy a Maruti, once you start driving Maruti doesn't know how you're using it, what are your driving habits, where you're going now. But if you buy a Tesla car, the Tesla knows everything, what's happening in the car, driving habits of the driver, what are the technical issues, what. So they have so much artificial intelligence and so much data, so they are way ahead of the competition. So that's why those companies are going to do extremely well. And this is happening because of 5G, this is happening because of software services, and this is adding all value to the economy. So all these big companies are going way ahead of the competition, and the quality of products which is coming in the market is way ahead, correct? Those who don't invest, now I give you a simple example. Simplicity is still a very small company compared to the companies which I'm talking, correct? But we have technology savvy advisors, correct? We have technology savvy people. Now, compared to many other a competition in the market who are still physically paperwork, we are way ahead, correct? So we are able to service the clients far better, far efficiently, and far large number of clients than a competition. So technology is an edge, correct? So every business who invest in that, they are going to benefit. So artificial intelligence, 5G, and big data. So we get data, online data of what constantly. I'm last 10 months I'm in America, but I'm in touch with every client of Simplicity. I'm in touch with every market participant. I know what's happening in every mutual fund company in India, because constantly the data is flowing, correct? I'm well connected. So that is, now if I was not technology savvy, I didn't have infrastructure, we didn't. So this, imagine with this new software, new hardware, and new 5G coming and satellite coming in worldwide, imagine how fast the growth will be there of the world economy. We will be living in a knowledge-based economy, and which is very good. So that is going to drive the world GDP and world economy and the world stock prices, because big companies are going to benefit more than smaller ones, correct? Then you take in financial transactions, UPI. 15 years back, if I had to do a wire transfer, we had to go to the bank, we had to fill the paperwork, take a demand draft. Demand draft is outdated, correct? Now, we make online payments. Everywhere it's online payments. You can, forget about online internet, you can do payments through phone, correct? See the transformation that has happened in the last 5 years in India, and see after demonetization, what happened? Paytm, correct? Overnight Paytm became popular. Even today, vegetable vendors in India accept payment through Paytm, and there's phenomenal, correct? Phenomenal. Today you can live without cash. I'm in America since February of 2020. Till today, I have not spent a single dollar. Not a single dollar of cash, because nobody is accepting cash. Here, everything is digital. That cash, hard cash, may have a virus on it, correct? It's a paper. You have to touch it. So many, that dollar may have touched. So nobody is using cash. So many businesses, they don't accept cash transactions. Now, not only not accept, now I'm using all payments by phone. I don't even use credit card, because credit cards, when you swipe, it touches something. But on wirelessly on phone, I can pay without touching anyone. So see the technology which is happening. There is a massive revolution happening in this. So more and more UPI payments, credit card companies, they are going to be more valuable than physical banks, because they can do business much faster, correct? So that's the technology revolution happening in financial services. Now you come to health services, correct? Health practices. You saw the healthcare sector in India boom. We have been telling everyone to constantly invest in healthcare. Why? Because the population of people above the age of 55 is going to increase by 600% in next 10 years. 600%. Whereas the population of kids below 15 is not going to increase. It's going to remain stagnant. So it's going to remain stagnant. The population of kids below 15 is not going to increase. It's going to remain stagnant, 0% growth. Whereas the population of people above the age of 55 is to grow by 600%. So what happens when you are more than 55 years old? Those people have more cash, they have more health issues. So they spend. So now massive expenditure is going to happen in next 10 years on healthcare. Now with COVID has also brought to the notice how health is important, correct? So that's why pharma stocks in India rallied. But in America, genomic stocks rallied. In India, pharma stocks have given 60 to 70% return. In America, genomic stocks has given 150% return. Their pharma stocks have given only 10% return. The traditional pharma companies in America give only 10% return. But all other research firms, they have given 150% return. And same trend is going to continue for next 10 years. If you see, biotechnology has beaten everyone in America. Every sector it has beaten in last 1 year. In US, and same thing is going to happen in India. In India, the number of those companies are much fewer. But if you take in US, US is way ahead of in biotechnology compared to any other country in the world. Way ahead, way ahead. So everyone needs to have a little bit exposure into this kind of sectors. Now, pharma and biotech returns are expenditure. So America spends 18% of their GDP on healthcare. India spends 2% of their GDP on healthcare. That is going to change. So that sector is continue going to boom, and we need to be staying invested in that. That sector is a very good sector for next 10 years. I'm talking about 10 years, not 1 year, 2 year. It's good. And genomics is a huge profit making. So they say in America, cancer will be totally cured in next 10 years. And dying will be an optional after 20 years. After 20 years, it will be an optional, correct? Now, the number of people with diabetics, massive research is going in this insulin, and see the number of diabetic patients all over the world, and see the demand, correct? So this kind of stocks and companies are going to do very well for next 10 years. Then countries that now coming back to the fifth sector, correct? That which is a space technology. Now, space technology in America is dominated by private sector. In India, it's only the government. So also India is still way behind in space. India has less than 60 satellites in the orbit. See America, how many it has. See Japan, how many it has. See China. So we are still way behind. But most of the space technology companies, satellite technologies, are in private sector in US, and they have given phenomenal return in last 1 year. Means they have just started giving, because most of these companies got listed in last 12 months. One is Spike, SPCE, which is by Virgin Galactic, they call it, which takes people to orbits and brings back them. And I have invested in that stock, a small portion. And those kind of in stocks, everyone should be investing a small portion. So we'll be offering those kind of investment options starting 2020-21. We are working on that, and we will be contacting you. And this kind of space technology, you should have a small exposure. And when you have this kind of exposure, this is a futuristic, correct? This is very futuristic, and you don't buy stocks. Stocks are very risky. You buy a sector. You buy multiple companies in that sector. So one companies fail, there is other companies. The sector as a whole is not going to fail, but there can be accidents, correct? There can be an accident. So there is an accident in a space rocket, that company's stock is going to fall next day. So we don't want to invest in stock. You invest in a sector, space technology sector, correct? As a sector as that, and it is a huge, and they are going to make massive because 5G, all technology, the globalization, this is the next growth sector where we need to be focusing on. And for next 10 years, you'll hear a lot of things about this. The companies then own Earth orbit, correct? So these are some of the companies which are in US. They're all US based. we need to focus on that. We need, as I said, correct, small exposure will be having it. And with that, I end my today's webinar. 2020 has been a boom market which has just started. This is not, it has been a very unusual year. It's a sad thing also that COVID-19 has affected so many families and so many individuals, correct? We all have been affected in some way or other, correct? So many businesses have been impacted. But 2021 should be a good year. In next 3 to 4 months, vaccines impact we'll see. We won't see the vaccine impact immediately next 2 months, but we'll see by summer, you see the impact. And I expect a good market. It will be a very volatile market. I'm telling you, it will be a very volatile market. Be prepared for 3 to 5% swings up and down. So we should do your homework. You should not panic. If market falls by 3% or 5%, what are you going to do? You should be prepared in advance and take advantage of that. And otherwise, if you're not prepared, you will take irrational, emotional decisions. Many people got out of the stock market in the month of April, May, June, and they are finding it extremely difficult to get back into the market. We should not do that. And with that, I end my webinars, and I'll take questions. As again, I have to give a disclosure as per SEBI. Mutual fund investing is risky. Past performance does not guarantee. Yeah, we all know that. Past performance does not guarantee, but the future is bright according to me. But you can read the disclaimer, and I wish everyone a very happy, please do subscribe to our channel, and I wish everyone a very happy and healthy 2021, and a wonderful for you, your family, and for your wealth. With this, I take today's question. So I don't see any questions so far. I'm waiting for my team to so feel free to ask, post the questions on the chat box of the channel. So how many of you on that 3% correction which we had 2 days back, at Simplicity, we called all our clients and made them invest on that day, whoever had some surplus cash, and we took the opportunity, and we are expecting this kind of volatility again in the and we'll build the portfolio from there onwards. And with this, I end my today's webinar. Thank you very much. Wish you happy, healthy 2021. Thank you. Okay, one of the questions I got here is, what are my views on Bitcoin? Yes, Bitcoin, that is going to stay here. Bitcoin is going to be another gold, and a lot of companies in US also have started in Bitcoin technology, correct? That technology is here to stay, and even Bitcoin, it's one of the sectors where one can invest. In India, they are not allowing it, but of course, in US, it's opening up, and people are accepting that now. 1 or 2% of your wealth, if you invest in Bitcoin, it's a good thing. The next question I got is, how serious is concern due to the new mutation? The new mutation is, we are yet to see the impact of that. That's why I hope it doesn't become serious, but we'll come to know in the next 10 to 15 days the seriousness about it. But US is already expecting, without this second mutation also, that the number of deaths is going to increase in the month of Jan because of the Christmas and holiday. People are getting together. So before things start stabilizing, things are going to get worse. They expect January and February to be very bad in America, very bad in America. But market has factored in all that into in that. The US government is also planning, as you must be reading the news, that they are coming out a $1 trillion stimulus bill where every US citizen will be given a $600 check in the mail. Trump is proposing to give $2,000. Biden may again give $1,200 after he comes into. So they are pumping cash in the economy, and this is hard cash. So that cash will have a positive impact on the stock market, irrespective of what happens on the COVID front, correct? Irrespective of what happens on the COVID front, things are, the next 1 or 2 months are going to be bad on the health front for US and the Europe. Do we have to increase our investments in the US in percentage terms? Yes, gradually. We have to, as better products start getting available in India, we'll increase it. We'll work case to case basis based on the risk profiling of the client. We'll do that. But yes, the US is one of the best capital markets in the world. US is one of the best capital markets in the world, and the quality of stocks and companies and innovation which is happening here, I have not seen that in any other country in the world. So yes, we should increase, but gradually, not overnight, not to go to 50%. If you are 15%, go to 20. If you are 20 to 25, but gradually, and we'll work with each case individually. Correct? Yeah. Yeah, we can do that, and then. Yeah, so as I answered that question, correct? Gradually, you have to increase the allocation to the US, and as better quality of funds are available in India, better quality of funds. I started offering US investment products in India in 2013. That time, only one fund was available. Then 2016, 2 funds were available in India. Now at least 5-6 funds are available, and options are opening up. As more and more options open up, we go for the best option. Best top 2 options we'll be going for. Not based on the past returns, we'll be selecting those funds based on the quality of the portfolio. We select on the quality and the sectors where the fund is investing. Yeah. Thank you very much. With that, I end my today's presentation. And thank you very much. Bye. Thank you for time, and do subscribe to our channel.